Hi there, traders. This is Brad Gilbert with a week ahead sort of kickoff for the 23rd of May. All right, now coming into the fourth week of the month. Right now, I've waited till early Europe before I started doing the updates, just to let the markets reconnect after the weekend, and that's for good reason. There's a lot of things happening, and I think they're going to set us up for a pretty good week where we could see a real big bounce. Maybe the dollar drifts slower, not because of like a weak US economy, but because there's not some major data coming out. Everything's on the back burner, and we've seen a bit of a turnaround in some of the geopolitical stuff. So the China concerns, this is getting a bit of two-way action. Dollar slips as China rekindles growth hopes. And then if you look at the top, there's about China concerns. So, but the main theme, and I'll show you the markets here in a second, that the market's running with is if the lockdowns aren't so bad in China or Shanghai, global growth comes back. That's great for equity markets. Okay, as I said, we're into the third week of the month. There's there's bits of data coming out, but really it's where we often see a squeeze, right? And in this situation, the market's long dollars, US dollars, so it would squeeze lower. Now, if I just give you a look at the really high impacting data that's due, you get the IFO business numbers today, right? Then Tuesday, there's a few PMI numbers. New home sales out of the States, nothing major, right? That would have to be quite a wild number, either weak or strong, to get something action, or get some reaction, and it usually isn't. The GfK consumer confidence numbers, okay, good sort of overall sentiment number for the euro. The durable goods and the FOMC minutes, they'll be key on Wednesday. And then you've got the GDP growth rate Thursday, right? Coming into Friday, some personal income numbers. So it sets us up really well, because as we come into the end of the week, the dollar's going to come back, right? As in really with some really good momentum, probably from Thursday onwards. But Monday, Tuesday, there's a chance for the dollar to drift lower, especially as I said, the euphoria over, say, potentially good news about China, no major lockdowns, all these sorts of things, could set us up for something rather nice. Now, if I just give you a look at the markets, right? So the equity markets month to date, whoops, if I just get that back up there, month to date, obviously you're not having an awesome run of it, but they have come back, clawed back a bit. Now, what's happening right at the moment now? So it's good to sort of look at where the markets finished last week, right? Bit of a dollar squeeze on the downside. What's coming up? When is the dollar going to reactivate is the main theme. I've already sort of showed you that sort of Wednesday onwards, but right now we are seeing a really nice risk on profile, right? You've got US equity futures up, okay, giving the Asian and European equities a real good boost, and the dollar drifting lower. This is like the classic risk on profile, right? That where you see equities rally, the currencies go with it, or the dollar drifts lower, right? And the one thing I keep sort of saying in these, every time I have a video, look at the reaction here on the cryptos. I'm getting really confident with the performance of the the cryptocurrencies with the equity markets. There's a sort of really clear, pretty high correlation. Now, what else could you expect? Well, okay, so China coming back into the scheme of things, growth goes up. Of course, commodities are going to be the one big impact there, right? Or they get the biggest benefit because China's producing everything globally. So if they're coming out of some sort of potential lockdown situation, or growth is going to really fire back, well, then they're going to come back too. Now, don't forget, the equity markets have been stretched, right? The US equities really driven lower. The same with the commodities. So we can see a really good bounce here on this sort of general news. Safe havens, well, not a lot to go on with here, because what we've got a situation where the market's very comfortable with everything that's going on. The volatility index is a little bit lower there as well. So let me just give you a look at the currencies, because it is shaping up quite well, regardless whether you're into the equities, cryptos, currencies, commodities, or whatever you might be into, whatever floats your boat. So just coming back here to the global markets now, as you can see, dollar index sort of drifting lower. euro coming back. I'd love to see euro get like 100 points higher, right? That's probably the best level to be selling. At the moment, don't forget, this US dollar trend isn't over. This is like one of those pauses, and it's the cycle over the course of a month where we've had all the big US numbers out in the first week and a half. Okay, then the momentum starts to fade, and with a bit of geopolitical fizz, it starts to run to the downside as everything sort of corrects whilst the market isn't really looking at the Fed. Right, so gold, commodities, okay, well, oil sort of hanging around there around 111. Gold sort of coming back. The US equity markets just coming back a bit. Once again, I don't think the trend for the dollar or interest rates is over in the US. So that means probably selling equities on rallies still. And you can see the cryptos have held in there and looked like they could sort of come back towards 32,000 or Bitcoin. And commodities has picked itself up off the floor there as well. Now, the currency picture, this is where trading different instruments makes a difference, right? Because sometimes the currencies look very clear. Sometimes it's the commodities, equities, etc. So like the dollar index just breaking down slightly through not a major like support level, pretty fickle if anything. It's right out here in the boondocks. Dollar Swiss did play catch up. You saw that sort of disparity early last week where dollar Swiss was going up and dollar was going down. That had to sort of correct itself. Dollar yen is starting to not really it's drifting lower, but not really accelerating. It's about 15 cents overvalued at the moment. And even dollar CAD, okay, still holding on to 127.90 despite oil just coming back a little bit. Now euro heading towards resistance levels up around 10. I think was it 106.5? What was that? Oh no, okay, yeah. So it's at that level there. That's the resistance level from last week. So I'd expect a few stop losses triggered above 106. Really, we could see a decent short squeeze, maybe above this previous high, right? Get some stops triggered here, and just in time for the US numbers. So what we want to see ideally is a short squeeze in all these pairs, squeeze the market, right? Get sterling up, Aussie, Kiwi, and get the dollar pairs down. And what we can see then is it sets us up for a really big ricochet when the US numbers start coming out Wednesday onwards and even next week, right? You're going to get much better levels. You love the markets getting flushed out of these trends and then back into them as the data comes on board. So just keep an eye on that. The currencies, I still think there's room for the dollar to drift a little bit lower from here. Equity markets, well, the US equity markets has sort of been getting hammered. I mean, like the DAX has been drifting lower. Everything's sort of coming back a bit, right? Coming back to these levels, resistance levels. Aussie picking itself up off the floor, change of government in Australia, no big deal. But the Aussie equities will go with the North American equities. And obviously the news out of China that they may be coming or reducing the lockdowns. I mean, as I said, there's contradictory news there, but you just got to go with what the market's reacting to. The volatility index tells me the market's very comfortable with what is going on. And then if I just come back over to cryptos, a lot of sideways movement over the last month. But if you look on the longer term for Bitcoin, Litecoin, Ethereum, they still are under a bit of pressure. You know, they could really do with the equities rallying hard, and I can't see that happening. So I think at this stage, equity markets are going to have a little bit of a run to the top side, but not far, right? And I think we're going to see potential for them to correct lower, but you've got to wait for the timing to get short. And now's not the time, just at the moment. As I was just saying, commodities, as everything sort of lights up in China, are coming back a bit. You've got gold, silver, copper. Iron ore is the sort of one big line that just isn't going at the moment. And then you've got Brent and light crude, both sort of hanging above recent levels. They look like they found a bit of a home. And as much as they put pressure and say, you know, it's the OPEC reducing supply, it works for every oil producer, which is mainly the US, obviously Canada as well. So they'll be making plenty of money out of that, even though they sort of say it's not our fault the fuel prices are higher. All right, so that's where we are with the global markets. As I said, with the major news events, there's a really good start to the week. The IFO business numbers, this is a great historical number. It's not one that sort of makes the euro gap. you can actually sort of get it to drift here and there. If these numbers come in a little bit stronger, right, euro is edging up through 106. This is the sort of thing you're looking for to get a bit of a run on the top side in euro. If it comes out weak, well, it goes against the sort of general run of what euro's doing, and that can get a bit confusing. So just keep an eye on that. There's out to tomorrow Kiwi retail sales, but I'll come into that later on. As I was sort of saying, the major numbers coming out are listed here. Now, if I change that back, I'm just using trading economics here for the key numbers. So if I go back to 2 stars, that'll give you the medium to high impacting numbers. It's always good to have a look across the board and see exactly, is there any second tier numbers here I should be looking for? Really, I don't think so. Like the business numbers here, you come down, there's some PMI numbers out Tuesday out of Europe and out of the UK. Wow, here, this is something worth looking at. Fed Chairman Powell speaking on Tuesday. Now you wouldn't have had that pop up had we not changed the settings. Obviously, Christine Lagarde there as well. Keep your eye on that. RBA Ellis, well, I guess he's a central banker. We've got to pay attention. Then you come down through Wednesday, right? So what you're trying to do is shape the week, right? What currency pairs are going to be in favor this day, next day, etc. We've got the RBNZ. This is actually, I'm surprised that's not a 3-tier number because it's a big release. They're looking for a 0.5% interest rate hike there as well. Obviously, the statement will be the key to the move because it's already factored in 0.5% rate hike. The FOMC minutes, of course, durable goods. Christine Lagarde also speaking. And it's not uncommon the last week of the month, right, that you do get a lot of central bankers speaking, right? It's the time. And what they're trying to do is the cycle of the month or the monthly cycle is the last week, they want to almost prepare you for what they're thinking about doing next month, right? So there's always a little bit of preemptive guidance in that, not aggressive, not this is what we're going to do. I mean, it can be if they're panicking, but they generally outline how things are going, you know, sort of timidly, but you can see some things in that. And that's why we watch those meetings. Retail sales figures out of Canada, definitely worth a crack, pending home sales. And this is where the dollar, after the FOMC minutes and the durable goods on Wednesday, we've got follow-up pending home sales and initial jobless claims. And then you get into the personal spending income numbers and the PCE price index. Now, that should be really a 3-tier number, being an inflation number, right? So definitely come through Wednesday into Thursday, Friday, the dollar is going to be the focus again. And that's where we may see the equity markets come under pressure, right? If all the US numbers are coming strong, especially the inflation numbers there, the PCE price index and the personal spending, et cetera, if they're strong, the dollar ricochets, right? Prepare yourself for that. And what that means, equity's lower, the dollar higher, and how that filters down through the various asset classes. So keep an eye on those things as we go forward. It's a interesting week. Usually there's not a lot to play for on in the last week of the month. But when I look at the charts and I see the setups that we've got and where these things could squeeze to, like euro here could easily squeeze up to 107, right, before Wednesday. That looks really good. To me, selling up towards 108 would be absolute. That's the big ticket level. But is it going to get there? I'd say probably not unless we see some really weird action on the numbers. But sterling also, if I just zoom out there, you can see, well, it's got, I mean, there's a previous high over here, but really the next major level is 250 points away. And we know sterling can do that. So as I said, just preparing yourself, get these levels up. I've got to change these charts. I've lost a bit of functionality with my trend lines, but the Aussie and Kiwi here, right? These 4 pairs down the bottom have a lot more shape because the dollar has just been driving them down. There's no sort of levels up here except the previous high here. So Aussie, Kiwi, sterling, euro, they all look pretty much the same. If we see one of them go, it's probably going to be enough to get the others to run as well, right? As I said, we've got sort of almost 3 days until the dollar kicks into gear. We could see it lower, especially if the whole euphoria is true in China, that they're going to reduce the restrictions on the lockdowns, global growth comes back, equities rally, dollar falls, there's your moves. But don't forget, we've got a new month starting in a week's time and the dollar will be back. You've got non-farm payrolls, inflation numbers, they keep rocking and rolling. and it's still probably too early for those interest rate hikes in the US to be making an impact yet. That's going to put more pressure on the Fed going forward. All right, guys, hopefully that weekly wrap gives you some sort of foundations for where to look, what to aim for, try and shape your week. If it hopefully it helps. If it does, let us know. Or if you've got questions, jump online and we'll try and answer your questions. All right, guys, have a good one. Cheerio.